I mean, I think if I think it would make far fewer mistakes. Obviously, if I could go, like, here's a list of all the dumb things you're about to do. Please do not do them. That this is something that would last for really, this works, and I think there are no unanswered questions.
Funded by entrepreneur and inventor extraordinaire Elon Musk, Tesla has been making waves in the tech scene. There are talks of the company being the next tech giant, on the same level as major companies like Apple and Amazon. The company announced that it made a profit during the second quarter of 2020, in spite of the global pandemic, which surprised analysts all over the globe. Share prices have also soared from a low $360 to $1,340 in August, creating a 300% jump in share price. Now, this volatility in price has caused a lot of speculation for Tesla stock. Will it rise even more, or will it drop drastically? That's exactly what we're going to be talking about in this video, so sit back and relax as I talk to you about the Tesla stock prediction. This is Business Explained. To learn more about all things money, get educated about how to do business, become business savvy, and enjoy more videos like these, subscribe to my channel and click on the notification bell, and may you be granted with many, many sweet returns. Let's first take a look at how Tesla came to be. Tesla Incorporated was formerly known as Tesla Motors. It is an American electric automobile manufacturer, and it was founded in 2003 by Martin Eberhard and Mark Tarpenning, a couple of American entrepreneurs. They named the company after the famed inventor Nikola Tesla. Tesla Motors' goal was to develop an electric sports car, and it received funding from a wide variety of investors. Elon Musk was one of the investors, and he has contributed over $30 million to Tesla. He was named the chairman of the company in 2004. Tesla was able to release its first electric car, the Roadster, in 2008. Its performance matched up to that of a gasoline-powered sports car. It could reach 60 miles an hour in less than 4 seconds, and it has a maximum speed of 125 miles an hour. That was the beginning of the company's inventions. It eventually moved from manufacturing just cars to developing and dabbling in other products, a move immortalized by renaming the company to Tesla Inc. in 2017. With Tesla's growth over the years, it's not a surprise that many are investing in the company. However, how has the stock been moving over the last couple of years? Well, in 2018, the United States Securities and Exchange Commission slapped him with a charge for securities fraud. This was done after Musk tweeted publicly that he would be taking Tesla private, saying that he had been able to secure some funding for the company. The Securities and Exchange Committee had deemed his tweet as false and misleading. The board then rejected a proposed settlement from the Securities and Exchange Commission, which supposedly came after Musk said that he was going to resign. However, the rejection caused stock value to drop. This prompted the Tesla board to accept a settlement that was less generous. Musk also had to step down as the company's chairman, but he was permitted to remain as its CEO. Both Musk and the company were fined a whopping $20 million. So what's been up with Tesla stock recently? There have been loads of debates on whether or not Tesla stock have been overvalued, with no one really knowing the right answer to that question. Let's dive into what's been happening to the company over the past few weeks. On the 23rd of August, Tesla surpassed Walmart's market cap, an amazing feat considering that Walmart has $534.66 billion in sales, while Tesla only has $25.71 billion. The company had announced a stock split, 5-to-1, earlier in August. This made Tesla's share more affordable to average investors, which stock splits are essentially supposed to do. Tesla shareholders are now getting 4 more shares for the 1 share that they were initially in ownership of. This does not change the total value, but rather it just splits it into smaller pieces. From the first quarter of the year, Tesla has made a goal to sell affordable electric vehicles to the public, aiming to manufacture and deliver roughly 500,000 vehicles this year. Their target has not seemed to change in spite of the global pandemic. This was also in the position to be included in the SP 500, which would have been great for the company. However, there was no guarantees of it being included in the SP 500. On the 14th of September, news reports came out that Tesla share price jumped over 12% in the middle of what they call a broad-based rebound in the technology sector. Goldman Sachs has also said that the demand for Tesla is gradually building up in China, which may contribute to the rise in the share price. If we take a look at the stock price's movement over the course of a few days, we can see that it's very volatile. On its worst record day, Tesla shares dropped by 21%. This came after S&P Dow Jones indices did not add the stock to the S&P 500. However, the next day it bounced back and rose by roughly 11%. David Traynor, an investment researcher and the CEO of New Constructs, is even saying that the Tesla stock could possibly be the most dangerous stock on Wall Street. No one really has a clear idea of how Tesla stock will perform over the next few years. Analysts are hopeful for the future of Tesla, excited for how electric vehicles might take over the market. Because Tesla is all about the creation and development of electric vehicles, the company should have an edge over its competition. However, more of the analysts on Wall Street have a sell rating rather than a buy rating. Adam Jones, an analyst from Morgan Stanley, had this to say about Tesla's shares. It's becoming increasingly obvious that Tesla is going to become a very large company, approaching, if not exceeding, Toyota or VW revenues in the next decades and leaving the world's largest luxury OEMs, original equipment manufacturers, behind. For the first time in our 10-year coverage, we're standing to model this company as a very, very large automaker. Now, Morgan Stanley is more optimistic about the company's share price's forecast. They believe it could reach up to $2,500 per share in the bull market. However, in spite of its optimism, it also takes into account the things that could go wrong along the way. In fact, a recent Deutsche Bank poll saw that 90% of its pool of investors find Tesla shares to be overvalued, while only 6% that they weren't. The stock may, as they say, run out of road, if the price goes up even higher. Recently, Tesla has been trading roughly 80 times its projected earnings for the year 2022. There are some who are hopeful that the value of the stock would continue rising, but there are many who are skeptical about how it would pan out in the long run. Its popularity right now has the makings of a bubble, which is, as history has shown us, not good. CNN Business projects that the high-end Tesla stock price will stay at $2,400. The median will stay at $1,300, while the low end will be $87. Of the analysts who studied the Tesla stock, 7 recommended buying, 15 say to hold, 4 think that it'll underperform, and 9 say to sell. What are your thoughts on the Tesla stock? Do you think analysts are being too short-sighted in assessing the stock's future performance? Do you think that the demand for electric vehicles will boom over the next decade? Let me know what you think in the comment section below. I'll be responding to each comment posted within the first hour of this video's posting. If you enjoyed this video, you should definitely check out my other video called The Apple Stock Analysis. One of the biggest consumer tech companies in the world today is Apple. Apple's given us so many products with a wide range of uses for our everyday lives. We've got the iPods, the iPhones, the MacBooks, and so much more, and it's all thanks to Apple. Now you're probably wondering if Apple stock is worth investing in. I mean, it is responsible for a lot of the hottest gadgets we can see in the market. The shares jumped way up high after it released its second quarter earnings. The company rose up to the market cap of over $2 trillion. However, a lot of investors are still thinking of whether or not Apple stock should be bought. That's exactly what we're going to be talking about on the Apple Stock Analysis. Stay tuned, stay educated.